Ladies and gentlemen, welcome to the Above the Bar podcast, where each week we belly up to the bar with a new guest, find out what they do, who they are, and what makes them great. So sit back, relax, and enjoy. Alrighty, folks, welcome back to the Above the Bar podcast. It's your host, Sean. We've bellied up to the bar again today. It is Wednesday. It's just cold. I don't even know what day of the week it is. It is Wednesday, the 28th of January, and we're talking about my favorite hateful topic in the world that if you know me, you know I can't stand this. You know I hate every bit of this. You know I'm not trying to do this. It is the worst thing in the world, and the people who make you do it are the dregs of society, and may they all get toothaches for the rest of their life. But why not have somebody out there to help you fight with it and help you fight through it? So joining us all the way from some part of Smallbany in a secret location where they cannot find him so he can continue to fight the good fight for us. And I'm going to make sure I got all my media up here because I just realized I don't have all my stuff up. But here to fight that good fight for us all the way from somewhere in a secret location in Smallbany, it is Mr. Ed Welch.
Thank you. What a great greeting.
See, I told you, Ed, I have no idea how I'm going to make it. They are always 110% off the cuff. So Ed's going to be helping us with what are some of the things we can do to deal with the IRS. You get that nasty gram from them that says, hey, you owe us everything you have because you made a mistake that you didn't know actually you made. And ignorance is not an excuse. And they're coming for you. So Ed's going to help us deal with that. But before we do that, let's go ahead and take care of some house cleaning here, folks. As always, over my right shoulder is the big board for Sticking a Cause. You have something you believe in, something you support, something you want other people to know about. You can reach out to us on Facebook, LinkedIn, YouTube, Twitter, Twitch, Instagram, all those different places. Our website is the abovethebarpodcast.com. Our email is abovethebarpodcast@gmail.com. Reach out. Let us know what you got going on. Send us that sticker. We put it on the big board. We read all about you for free, and you can't be taxed on it because I'm asking you to send it to me. Ed, this is going to be the whole night. You have no idea how much I hate taxes. So we got that going, and then we got to talk about the people who pay the bills around here. That's Budget Blinds of East Greenbush, Hudson Cooksaki, Schoharie, Delmar, and Clifton Park, North America's largest custom window treatment company, dealing with everything from blinds, shades, shutters, drapery, even do window tinting. You name it, they can cover your windows. Reach out to them. Let them know what you got going on. You got a couple more days left here in the month of January where they're running a sale. It's 20% off product. Take it. George, in a minute. Take 20% off a product and another additional 5% off of anything that they motorize. And as always, folks, if you tell them that you're there to belly up to the bar, they're going to give you another 5% off. So you can get something motorized for up to 30% off this month. So make sure you're reaching out to Budget Blinds of East Greenbush, Hudson Cooksaki, Schoharie, Delmar, Clifton Park, pretty much almost the entire capital region. Reach out to them. Let them know what you got going on there, and they will be more than happy to take care of you. Here we go here, folks, real quick for my man, Winnie Highland. We all know our friends over at Outlaws. Winnie got a little touch of the cancer, a little touch of it. We're always fighting for you, brother. We're always believing in you. Keep fighting the good fight. And fuck cancer. I'll say it for you. And thanks, George. George was on with us a couple weeks ago. Budget Blinds and best budget blinds in the capital region. I appreciate you, brother. So, all right, all the house cleaning is done. And folks, if you're just joining us, make sure you give us a like, share, follow, whatever form of social media you're on. All right, Ed. So let's get a little bit into your background. So you're here in the Albany region. You've got 30 years as a CPA. How many times did you correct your kids' math? They're like, you're not doing it right.
They weren't really cut out for the math sort of thing. So I try to take it easy on them. And it's kind of a misnomer that being an accountant or a CPA really requires great math skills. No. I have to have great math skills, but it's not It's not a requirement.
It's not a requirement of it, huh? So you did that. Let's see. I'm just taking a look at all the different things you did. You worked for Arthur Andersen out of New York City. Was that were you remote before anybody knew what remote was, being in the capital region and working out of there?
No, I graduated from college here at SUNY Albany, went to work for Arthur Andersen down in the city, and met my lovely wife at Arthur Andersen. She had to quit at the time because we were not allowed to have a relationship. Those were
fraternization. Was that the fraternization?
Yes. So so I worked for Arthur Andersen for about I guess it was 7 years or so, living in the city, and then went to work for a client, became a director of internal audit, did that for a few years, took a job with them as a CFO out in California, spent a few years out there. Eventually, we had some kids, adopted 3 kids, actually.
Oh, wow.
When we were in California. Well, 2 while we were in California. And then we decided to move back east, came back to the New York City area, adopted a 3rd child in New York, and then, spent a few years there. I had various additional jobs, kind of CFO type jobs.
Okay.
And really what happened, my wife and I were both working for .com companies back around 2000 when the .com bubble burst, and both our companies went bankrupt. And we said, you know what? This might be a good time to get the heck out of here. So I kind of always wanted to move back upstate. I grew up in the Binghamton area.
Okay.
And we, years before, we had bought a home up in the Adirondacks, a place called Piseco Lake. And so for years, we were commuting from New York City. We had these little kids. We'd be driving like 6 hours over the weekend, to spend a weekend at our place. And we said, you know what? Let's move upstate, get closer. And I decided that, I wasn't going to make the kind of money that I was making working for big companies down in New York. So I decided to do something totally different. And I bought a bunch of tax franchises. And at the time, Liberty Tax, Liberty Tax was founded by a guy named John Hewitt, who he actually invented the first computer software to do taxes many years ago when he was working for H&R Block. He left there and formed his own company, and that ultimately became Jackson Hewitt. He left Jackson Hewitt, started Liberty Tax. And at the time when I invested in it, it was kind of at the beginning, and the territory up here in the Albany area was wide open. So I bought 8 territories at once, which was, in hindsight, was a mistake. I bit off a little bit more than I should have. But at one time, I had all 8 Liberty Tax offices open, stretching all the way from Albany, Troy, Hudson, New York, Queensbury, Glens Falls. And I used to, it's a winter business, and I would have to drive around to all these different locations in the middle of winter.
Wow.
And, it became too much. So over the years, I sold off a bunch of them, and I still own one Liberty Tax office. It's in Albany. It's a great location.
Is it the Watervliet one?
No, not Watervliet. It's actually at Colvin Ave. There's a Hannaford shopping center there.
Okay.
Across from where DMV is now. So it's a fantastic location. That's an
incredible life story, she said.
You can hear her, can't you? Oh, she said, yes, I should say the address, 900 Central Ave.
You should. Listen, that's why you're here.
That's why she's here.
You said Colvin, which, okay, no one knows Colvin.
All right, quiet, dear. All right.
Listen, folks. We talked about this before the show even started. I was going to just kick Ed off and let his wife do the interview, and I have a feeling that would have been like she's already got it all set up. She's ready to rock and roll. But isn't it But you know what? I want to go back to something for a second, and I'm going to praise your wife for a second here, even though we don't know each other like that. But the fact that she had a career in the same place you had and saw something in you that she was willing to say, you know what? I'll leave my job for this man and did that. And I hear her now, I imagine it's only been a couple years you guys have been married. And
Only
she
40.
only 40. See, I knew it was only a couple. And she's still sitting there cheerleading you today. So
Yes.
that is a testament, that saying of behind every great man is a great woman. That is a testament to that fact that she's still supporting you. I know that's how I'm able to do what I do is because of my wife supporting me. So that's pretty awesome, and hats off to her.
Yep. Best decision I ever made.
Actually, it was best
Marrying her.
he ever made. Letting you stick around, huh?
Yes.
She could have been like, I don't know about this guy.
Yeah.
So you come back and you're doing this, and I love the fact that you went into the franchise world because I franchise myself. I'm all about the franchise world. Orchid says taxes have become such a dependency for people these days. I'll pay for it with my taxes. I'll hold off until taxes. I feel like a tax return should be extra funds for saving, not to save you from debt. Here's a better one for you, Orchid. The federal government is not your savings plan. Every dime you give them over is money they didn't deserve, and they reluctantly are giving back to you because just so you know, if you owed them money, you got about 2 hours to pay it. If they owe you money, they'll take their sweet time giving it back. So that's my 2 cents. I told you, man, I hate taxes. I absolutely despise this stuff.
Well, the other thing is, after 3 years, they won't give you your money back at all.
Isn't that beautiful? But how long is it when they figure out that I owe them money? How long can they hold that against me?
Well, there's a statute of limitations of 10 years. So after 10 years, you're in the clear.
Isn't that great?
And that's only 10 years from the date you file the return. So if you file them late, then the clock starts ticking when you actually file them. So 10 years. New York State's 20 years.
Oh, the People's Republic of New York.
Yes.
Yeah. All we're missing is a leader named Shang something, and it would be perfect around here. So you've been doing this, but you've been helping people now dealing with tax issues. So you really got into the tax fighter thing in 2022, right towards the tail end of we were all dealing with COVID. What made you decide, like, you know what, I have this background. Let me start working with people to help them with this issue?
Well, over the years, I had dealt with a lot of people who owed taxes. And if they were a tax client of mine, I would say, like, well, I'll just help you out with this, right? And I wasn't really charging them for it. It was like, yeah, you're a good customer. But then I became aware that there's companies out there that are making a lot of money doing tax resolution. And it wasn't just the opportunity to make a lot of money doing it, but I also found it satisfying. When you're doing a tax return, it can be somewhat of a commodity. If you know what you're doing, you should be able to do the tax return the same as the guy across the street who also knows what he's doing. And it's a bit of a commodity. When you get into the tax resolution field, it requires a certain skill set to be able to do it. You really need to know what you're doing, and not everybody does. People assume that if somebody's a lawyer or an accountant, that they automatically can handle tax resolution. That's absolutely not true. But at the end of the day, what's really satisfying is to really fight for people and to save them tens of thousands, sometimes hundreds of thousands of dollars. And that's a great feeling.
Oh, I can't even imagine. Look, folks, if you're, we're getting right into the the start of tax season. If you're already concerned or you're already starting to see the writing on the walls, like I think a perfect example is this is your first year as a 1099 and you didn't take the time to handle that properly. This might be when you need to call Ed. Check out taxfighterinc.com. Great tagline. We fight for you. Again, that's taxfighterinc.com. Orchid says, I'm sorry, I have to study for block training tomorrow. I know exactly what she means. But thank you so much for the info. And I'm finishing watching the interview tomorrow after block. Thank you for helping. So she's on the railroad. She was a Marine, and now
Okay.
we were both conductors on the railroad, and she has her annual training. What's up there? Giuseppe's over on Instagram watching us over there. He's a franchise. He sells franchises, Giuseppe. But he's over watching us on that side. But
I think I watched. He was on the podcast. Yeah, I watched it.
Yeah, it's good. I'm a big franchising person. So, but let's kind of get into this. What are some of the things that folks can do now, like before, like just to prevent? And listen, Ed, I'm not trying to take money out of your pocket, but what are the things that you look at and you're like, well, hey, man, if you'd have just put happy instead of glad, you and I wouldn't even be having this conversation. What are some of those things that people completely miss?
Well, the first thing I'll say is when I talk to a prospective new client, the first thing I ask them is, have you filed all your tax returns? Are you current? So the first thing I would say is stay current. Don't let 10 years go by where you're not filing your tax returns, because when you get to the point where you do owe the IRS a lot of money, if you're not current, they won't even talk to you about a solution. And to be current, they call it to be compliant, you have to have filed for the past 6 years. So at this point, so actually it's good news in the sense that if you haven't filed for 10 years, if you go back and file from, at this point, 2019 through 2024, then you're considered to be compliant at that point. So that's the first thing. And I get a ton of people who just haven't filed their taxes. And that's the first thing I say, we got to get those tax returns filed. And it's a problem because for 2019 through 2021 right now, if you do file those tax returns, you have to mail them in. You can only go back and e-file the prior 3 years tax returns. So, and it takes the IRS, it could take them 6-8 months to process a paper return. It just sits there until somebody gets around to looking at it. So if somebody's really anxious to get their situation taken care of and they're filing 2019, 20, 21, then we're not going to be able to do anything for probably 6-8 months to help solve their problem. So that's the first thing. The second thing I would say is don't ignore the situation and hope it's going to go away.
It doesn't.
People get complacent. And this happened particularly during COVID when the IRS was kind of shut down. And they just didn't have the people to really handle enforcement. So nothing was happening for a couple years. So people were like, hey, I haven't heard anything from the IRS. I must be good. Now they're catching up. And so there's kind of an avalanche of notices going out these days.
Oh, it's the worst. And look, folks, for you, those of you that are out there right now, if you have a simple tax question, look, Ed's not going to review your tax returns today to figure out what's going on. But if you've got a simple question, something you're interested in, drop it into the chat wherever you're watching right now, so that we can get those questions out there. So those are the simple things. And the stuff you're saying, Ed, I'm going to be real honest about it. It's not like, hey, make sure that you've got, something super special. It's just suck it up and do your taxes. None of us want to do them. None of us like doing them, but do your taxes and do them every year. And I'll tell you right now, personally, as a business owner, they never forget. Like I've gotten messages almost 2 years later on things that we thought were all taken care of. Everything was paid up, and them go, oh, we realized there's another $1,600 we missed and you owe us, and we try to figure it out. And I've got somebody like an Ed on my side, and they're going, Murph, you can try to fight it, but the reality of it is it's going to cost you more to fight it than just give them the money and go away. That's the
Yeah.
worst of it.
But it does drive me crazy when people get a notice and they automatically just pay it, because the IRS isn't always correct. An example of that would be if somebody had capital gains, for
Okay.
example, and the IRS gets that information of the proceeds from selling stocks, mutual funds, etc. So people will get, and if somebody doesn't file that form, then the IRS will send them a notice and say, hey, you sold $40,000 worth of stock and you didn't report it on your tax return. And so you owe us whatever, $15,000 in taxes. But what the IRS doesn't have and what they won't show on the notice is the cost basis. So in other words, what did you pay for? So, for the $40,000 worth of stock you sold, you may have paid $50,000 for it. You may have actually had a loss.
Oh, okay.
And so that's very common. People get this notice and they're like, oh my God, I owe $15,000, So wait, hold on. Get your statement from your broker. Let's see what your cost basis was. They may owe you money. So yeah, and regardless of, unless you're absolutely positive that the IRS is correct and you owe the money, it's worth just running it by somebody and say, is it correct or not, rather than just paying them.
How about, in these situations, when do we go from an Ed that's fighting for us? And again, folks, check out taxfighterinc.com if you've got a situation you don't want to ask the question now, but you want to get Ed's opinion, you want to set up something with him. When do we go from somebody like you that understands the tax code and does what you do to a tax attorney? Like when do I have to move to that level?
Hardly ever.
Really?
Totally, to be totally honest.
Yeah, please.
And a lot of lawyers, as I said before, they just don't specialize in this. I've had a number of cases where people have gone to consult a lawyer. I had a guy, this is a guy who used to work with my wife down in New York, actually. And he had a situation where had to do with a relative of his who had died, and he was the executor of the estate and so forth. And the IRS came after him as the executor and said he owed like $100,000 because this guy hadn't filed a tax return and, he didn't include certain things. So they came after him and said he owed $100,000. And he went to a lawyer, paid the lawyer like $1,000 for a consultation. And the lawyer said, sorry, just pay it. You got to pay it. You owe the money. But he really didn't owe the money. And, I worked with him to go, there's something called, which we can talk a little bit more about. The person had died. The money from the estate had all been distributed. This guy who they were going after didn't have any of the money. And I was able to get something called the currently not collectible. The entire $100,000 went away.
Oh,
but
wow.
he had consulted this lawyer, and the lawyer obviously didn't know. He just said, yeah, I'll take my $1,000 and just go pay it.
So then what's the difference between what you're doing? I guess this is where I'm a little confused then. What's the difference between what you're doing and what my accountant's doing? Like, my accountant's doing my taxes. He's going through and making sure I don't go to jail, because that's what I always tell him. Like, listen, man, just make sure I don't go to jail. I don't know. Listen, if I tell you that my Pomeranian, I do not own a Pomeranian, is my guard dog, just make sure I don't go to jail because of this situation. So how does what you do differ?
Well, I also do what your accountant is doing. Okay. So I do taxes. I just spent all day today doing tax returns. So that's one thing, tax preparation, making sure you do it correctly. So the person's not going to, so that you or any taxpayer is not going to get in trouble for filing a bad tax return. So that's one thing. But where my tax fighters business comes into play is where somebody actually has a problem with the IRS. It's more after the fact. So, this is, somebody didn't file taxes, they file them, they owe a bunch of money, or they filed their taxes, they got notices, they ignored it. That's where I come into play and say, so most people, when they hire a tax resolution specialist, one of the first questions they ask is, can I get an offer in compromise? Okay. That's the term that people know, offer in compromise. And they think it's just a matter of going to the IRS and negotiating, saying, hey, if I owe you $100,000 and I can pay you $50,000 right today, will you make the rest of it go away? That's not the way it works. So in my initial consultation, I try to address the offer and compromise situation right off the bat, because that's the thing that most people are familiar with. And the reality is they're very hard to get. It's very rare that the IRS approves them. The reason being that if you have assets that exceed the amount you owe the IRS, right off the bat, they're not going to entertain an offer in compromise. So let's say somebody owes the IRS $50,000, but they own a home and they've got equity in that home of $100,000.
Okay.
I ask them that question, say, all right, forget the offer in compromise. It's not going to work. So that takes that off the table. And then we can go to some other possible resolution strategies. So what I typically do is I get a power of attorney from the client. So the IRS will talk to me on their behalf. I call them up. I get the transcripts going back years to see what the complete picture is of their tax situation. How much do they owe? How much penalties and interest are in there? And then kind of assess what a strategy might be. Now, the first step after getting the transcripts would be, okay, can you afford to pay this or can you not afford to pay it? And to make that determination, you have to do a financial statement. So I work with the customer, with the client, to go through their monthly financials. How much are you bringing in every month? How much are you spending every month? And how much is left over at the end of the month? So if you go through that analysis and you say, well, I've only got $500, I may owe $200,000, but I've only got $500 left at the end of each month. I could never pay you all that, but I can afford to pay you $500 per month. So we submit the financial statement. We say, okay, this is it. We want a partial pay installment agreement for $500 a month. Now, the strategy with that is, I mentioned before, maybe I mentioned this to you before we get on the air, but the 10-year statute of limitations. The abbreviation is CSED, CSED. It's forget exactly what it stands for, but it's a statute of limitation. So what we try to do is to pay the $500 until the CSED runs out. So the CSED maybe there's only another 3-4 years for the CSED, right? Say, okay, we'll pay you $500 a month for the next 4 years, and that will maybe pay off, $20,000, but I owe you $200,000. And when that 10 years comes up, it goes away, the remainder. So the strategy is to pay as little as possible.
That's absolutely genius, Ed. So it's like, even though, excuse me, they're like, hey, you owe us this money. You get to past that timeline, whether it's paid off or not. Oh, well, it's not like it's, hey, you've already admitted to it. You've already accepted it. You've got to pay it. It's, hey, you'll get as much as you can get out of me until that time runs out and moving on.
That's it. Because, by law, they can't come after you after 10 years. And, if somebody really only can afford to pay $500 per month, then they're not going to get any more than that. It's like you could try all you want, but you can't, the money's not there. So that is a great strategy, and that is by far the biggest strategy that we use.
Now, is that how, like, you hear these commercials on TV where they're like, such and such was able to settle my tax debt for pennies on the dollar? Is that what they're talking about? Like, they realize, hey, this has got 10 years. You can't afford 200 grand. You can afford $20 a month. Is that what they're talking
That
about?
is what they're talking about, yes. However, I'm glad you brought it up, because these people who are advertising, these big national firms, ripoffs. A lot of them are ripoffs. I'll give you a quick story. I won't mention the name of the firm. I don't want to get sued, but I had a woman call me a few years ago, and she had hired one of the big national firms, and she owed quite a bit of money. She owed like $260,000 or so. Hired these people, paid them $20,000 up front. They did nothing. They came back to her and said, okay, we're going to do an installment agreement for you. And the installment agreement's going to be the entire $260,000. And she's like, what the heck did I hire you for?
I could have done that on my own.
Got money at that point. I say, yeah, it's the best we can do. A lot of other companies we call them offer and compromise mills, right? So
okay.
I mentioned before that most people aren't going to qualify for an offer and compromise, but a lot of these firms will tell somebody, we're going to do an offer and compromise for you. They don't go through any of their financials or anything. We're going to apply for an offer and compromise, pay me $10,000 and we're going to send that in for you. So they do that. It comes back rejected, which they knew it was going to be rejected all along. And they say, hey, you paid us to file the offer and compromise. We thought it would be accepted. But so there's a lot of unsavory characters out there. And, on that point, there's a guy in Albany, a lawyer, who actually says he does specialize in tax resolution. He's been doing it a long time. So I had a woman call me a couple years ago now. She went to him. He filed an offer and compromise for her, charged her $6,000. It was rejected. I looked at this and I said, her assets, she had a lot of assets. Her husband had died. She had a bunch of money in the bank. She owed a home.
They weren't going to take that, huh?
They weren't going to take it. But this guy had her $6,000 and he said, they didn't accept it.
Wow. So then I guess the other side of it, and I love the fact that it sounds like you have almost like a troubleshooting tree to this process of, okay, we've started here. Do you have the assets to pay it? Yes. Well, we got to go this way. Do we not have it? We're going to go this way. I love the fact that you have a system in place and it's not just like we're running rickshaw and figuring out what to do. How about the other side of it? Have you run into situations where it's almost like you just got to give them a big hug and pat them on the back and be like, we're going to go ahead and pay this? Like, where does that start at?
I'm working with a woman right now and she owes quite a bit. She's an old lady. How old is she? She's close to 80 years old. Okay. But she still works as a consultant for some theater company down in New York City.
Okay.
And this theater company pays her $85,000 a year. They pay it to her up front, so she gets a lump sum, $85,000 in January. And she is considered an independent contractor. She's not an employee. So you mentioned before, self-employed people, 1099s. She gets a 1099. She owes a bunch of money. She doesn't have any business expenses. She just gets this lump sum. Her monthly expenses in New York are very low.
Oh, that's impressive.
Yeah, because she's, rent controlled apartment for many, many years. Her rent is really low, and she just doesn't have a lot of expenses. So I went through her financials with her, and I'm like, Mary, you know, we really can't do it. You've got excess money. You can afford to make a certain amount of payment. So we'll do, maybe not pay off the whole thing because she owes a couple $100,000. But here's the thing with her. She's 80 years old, and the
Ain't getting
CSET
Yeah.
and the CSET on some of this is going to start expiring, and she may not make it another past
Right.
another 5 years, So, but there was very little I could do for her other than try to maybe minimize a little bit what she'd have to pay.
How about with what you do on the other side for folks like us that own businesses? I actually have a friend of mine who's dealing with some tax related stuff where it wasn't his fault. He was actually paying his taxes, and New York State wasn't applying them properly. Like, is that something you would get involved in, or
For
is that
sure.
more? Yeah, he was paying it was a sales tax situation. You talk about that 10 years. 10 years doesn't apply to sales tax, folks.
And
His
plus, it's sales tax is New York State
Yeah.
besides,
Yeah,
and
it
it
was
doesn't
10
apply
years.
to either payroll tax or sales tax. Actually, payroll tax on the IRS side, it does apply,
Oh,
but
does it?
New York State, forget it. I'll tell
22.
you I'll tell you a quick sales tax story.
Yes, please.
Guy called me a couple years ago. He used to own a restaurant, and believe me, I work with a lot of people who got in trouble owning, bars, restaurants, etc. This guy, I guess he actually owned a bar,
Okay.
and it didn't do very well, and he didn't pay his sales tax. And it dated back years, right? So he owed like $6,000 of sales tax, and he could afford to pay it,
Not
but
that
he
bad.
didn't. But he didn't pay it, and years went by, and the interest penalties kept accumulating. And
Oh,
then finally, and this is the hammer that New York State can use that the IRS can't. They said, if you don't pay this or make arrangements to pay it, we're taking your driver's license.
I didn't know they could take your driver's license.
They can. And this guy was driving for a living now. So he said, I can't let them take my license. I got to do something. So he had already entered into this installment agreement before he even called me, which was a mistake. But this $6,000 original bill went up to 20 some thousand dollars with penalties and interest. And then he did an installment agreement where he was going to continue to have to pay interest on this amount. It ended up being he's going to pay like $35,000 for a $6,000 loan. And he said, yeah, I could have paid it. I could have paid it to begin with, but he thought he could get away with it, I guess.
Yeah, you never win. You don't. And it's funny you mentioned the penalties and interest. Again, listen, folks, everyone who collects taxes, whether it's state or federal, are a bunch of scumbags, because if they're late, if they didn't realize that they owed you money and you catch it and it's 2 years later and you're like, hey, you owe me $4,000, they're not going to pay you interest on the $4,000
Yeah.
that they owe you. But if
Yeah.
they realize you owed them 4,000 2 years later, hey, there's 2 years worth of penalties and late fees that you owe us. You absolute scumbag. I'm sorry, Ed. I really hate these people with such a passion. I'm a big flat tax guy. I mean this with all the love in my heart. I would like to make you unemployed, Ed. Get rid of income tax, whether it be state and federal. We do a flat tax across the board. Nobody can hide money. When you buy something, you get taxed. Suck it up, Buttercup. And it's all the same. And the IRS is about 6 people.
It's never going to happen, though.
I know, because the scumbags are stealing everything. They
Yeah.
just look at it and they go, hey, we got to have these roads. Got to have these roads out here.
The flat tax is never going to happen. There's so many things built into the tax code right now. For example, the earned income credit, where people people who don't pay in any taxes into the system are walking away with $10,000, $15,000 tax refunds.
Isn't it
And
amazing?
yeah,
Isn't that
with a
amazing?
flat tax, you can't do that.
No, because all that goes away. All these BS things where they're like, oh, well, we'll do listen, the guy who owns the construction, it's like, and this is my soapbox for a moment. It's like when these people are like, we're going to tax the rich, and I'm like, you do realize that the rich people don't pay taxes the way you and I do, and they're like, huh? You said it about the stocks. I'm like, go look at how Elon Musk bought X. The bank said, well, sell your stock. You have the money to buy it. And he said, I don't have any money. You guys are just evaluating something that's a piece of paper. It's not real. I don't
Well,
have money.
that's why now they're trying to go after unrealized gains. That's been
Oh, I
floated.
haven't heard that one. That'll be
Yeah.
great.
No, they're floating that, believe me.
That'll never happen because then all the guys in Congress would have to pay some actual real taxes, and they're not hearing that. They might float it around like, ooh, isn't this special? They ain't doing that because Nancy Pelosi ain't getting up off of the money she's made off of the stock exchange. Not
Yeah,
that
I don't
one.
think it's going to happen.
Oh, I get so fired up.
You never know. In California, they're trying to pass a billionaires tax out there, and most of the billionaires are moving to Florida and Texas.
That's no. Oh, Matt. No, Matt. This is live, brother. You're still you weren't late, but absolutely. And it's funny to me that you say that. All these states. I just heard a thing, and I'm curious your feelings on this. I just heard a thing from the Zohan down there in New York City, Mondani. He wants to raise the corporate tax in New York City to match New Jersey, which is 11.5%. In New York City, 7.2. He wants to raise it to match New Jersey's, and it doesn't matter if you're headquartered there; he'll tax you the exact same way. Which again, folks, and Ed, I need you to fix me here. You tell me if I'm wrong here in a second. You got to fix me. This might just be my libertarian way of seeing the world. So you got to fix me here in a minute. All these companies that you want to tax, folks, are the same people that are paying for your neighbor's house, for your schools, for everything else under the sun. Even though they don't pay taxes the way you do, they employ everyone who goes to work who pays taxes.
And they also do pay a lot of taxes. The rich people, it's the whole Wall Street contingent in New York City pays most of the taxes that the city. So it's insane. That the beautiful thing about this country is, if things get out of hand in one place, you can pick up and move someplace else. And there was just a thing in the paper this morning about so many people have moved out of California and New York and Illinois to Florida and Texas. Florida and Texas during the next census is going to pick up, a bunch of seats.
I heard about this, and it's like that's why all this stuff with the maps is going on, where they want to redraw the map because they're not saying that that's why, but they're if you know how to read, you can figure it out.
Yeah, definitely.
Oh, absolutely. Yeah, I get fired up about this. Real quick here, folks. It's almost time for that last call. So let's go ahead and listen, I created this ad just for you, Ed. Your favorite tax deduction. This episode is brought to you by New Scotland Spirits, because if tax season's got you stressed, it's time to pour something that makes the numbers hurt a little less. W-2, 1099 deductions. Yeah, it's a lot. But at the end of the day, you deserve a break, and that break should taste like small batch, locally crafted whiskey straight out of upstate New York. New Scotland Spirits is bold, smooth, and made with no shortcuts, just like the returns you wish you were filing. Visit NewScotlandSpirits.com to find your bottle. New Scotland Spirits, the only refund you'll actually enjoy.
Beautiful. I love it.
You like that one? That was a pretty
Yeah.
good. There it is, Matt. Absolutely, gerrymandering, 100%. So let's get back into it, man. And I'm going to try to stay off my soapbox, Ed. I'm sorry. I apologize. I apologize now because every time I pay, like my favorite one right now is paying sales tax. Do you know how much I hate paying sales tax? Because I'm like, so I'm collecting money for New York State, like a New York State employee,
Right.
none of the benefits as a New York State employee, and they took mine from quarterly to monthly. So now I don't get at least that stupid $200 out of the deal.
Right.
It's like, oh no, no, no. You're on monthly. We're not even going to give you any. You got to do more work, and I have to pay somebody to calculate all this shit to make.
Yep.
I'm right. So let's walk through it. You talked about some of the things that people should do from Jump Street. What are some of the red flags that are out there, or let's flip that? What are some of the things that people don't realize that they can be putting on their taxes as a deduction that you're like, dude, the pack of pens that you bought, you didn't realize that's a deduction. I know I'm just throwing something out there, but what's some of the things that they could be doing that they're even missing?
Things they could be doing. I would say that, let me go back to the things that people might be doing that might get them in trouble.
Let's start with that then.
So, and I think the biggest thing would be people who are self-employed. And there's so many people out there who open businesses and they don't have any idea how to keep track of their income and their expenses, don't save receipts. They come in and said, yeah, I had this business. Well, where's your books? Well, I made about $50,000. They make up numbers. And of course, if they make up numbers with me, I'm not doing it. But I have a feeling there's a lot of making up going on out there in the world where people are doing their own taxes. So that's one thing. The other thing that gets a lot of people into trouble is the whole thing with claiming children.
What do you mean?
People are of the belief that their kids, they can go to a friend or something and say, hey, I didn't work this year. I'll let you claim my daughter. I'll let you claim my son. And they'll fraudulently put it on a tax return. And, the IRS can't audit everybody. So they can get away with it. If they don't get away with it, then they're going to have to pay the money back. They're not going to go to jail or anything. But if somebody got a big tax refund for claiming a kid that they shouldn't have claimed, then they're going to have to pay the money back. I had, in that regard, I had a call the other day from a woman who she was going to file her tax return head of household. She wasn't happy with the refund. She said, well, I'm going to let my husband, she said, claim him. I said, wait a second. Are you married? No, I'm not married. It's my boyfriend. I said, oh, you said it was your husband. It's your boyfriend. So she said, I'm going to let him claim. I said, is he the father of the child? And she says, no. I said, well, he can't claim him then. What do you mean? She said, it's none of the government's business who the child's father is. And I said, well, who is the child's father? She said, I don't know. I sleep around.
I don't know. Shit. He could be the dad today.
So needless to say, I sent her on her way.
I mean, well, that's a great, but you know what? That kind of feeds into a question. So what if a couple is living together and one person doesn't work and the other one does? Can that person who works, even if the child isn't theirs, they're not married, can they legally claim that child? Because they're taking care of them.
Yes and no. They can claim the child as what's called an other dependent, which is a kind of a minor benefit. It might be worth up to $500.
Okay.
They cannot claim the child as their child, so they cannot get child tax credit, earned income credit, those credits that are worth thousands of dollars. But I'll tell you what, that's another red flag, I would say, is that in people in that situation, they often will put on their tax returns that it's their stepchild. And it's really only their stepchild if they're married.
You got to be married.
But if they're not married, it's not their child. It's not a stepchild. It's not their child.
It's just another dependent, somebody you're taking care of.
Another dependent.
Like I want to.
That's the thing. So if somebody has a girlfriend who doesn't work, they live together, the girlfriend doesn't work at all. He doesn't have to be a child. He or she can claim that boyfriend, girlfriend as an other dependent. It's worth $500 because they're supporting them. They lived with them the whole year. They didn't earn any income. So there is some benefit to that situation.
Interesting, because like my mom moved in with us in March, and she's capable, but we don't ask for rent. We don't ask for anything from her.
Yep.
I guess that would be something
we could. $500.
Yeah. Listen, I like it. Listen, I'm all about
500 for you.
You're worth 500 bills. I like it. Wait till I explain that one to her. I'll be like, Mom,
yeah.
You're worth $500. She's gonna be like, what the hell are you talking about? Because I'm curious about those kind of things. Because listen, when you know how it is, when you own a small business, you're looking for every nickel and dime. How do I keep everything above board and floating, so I don't have to, constantly be fighting my way through and paying all these taxes.
For sure.
Now, back to your website for a second here. So if somebody was out there and they're like, hey, I'm going to it right now, taxfighterinc.com. Oh, did I type something in? Tax Fighter.
It's actually should be Tax Fighters.
Oh, Fighters.
That on the thing earlier. Tax Fighters Inc.
Fightersinc.com. Let me fix myself. I like your web. Actually, who does your website? This is nice.
Nice. We're in the process of actually revamping it right now. It's pretty nice the way it is, but it's going to be better.
Look at that. You very ruggedly handsome picture of you in your gray suit on here. So you got the phone number on here. You got all the contact information on here. What's your process? So I picked up the phone, or I went through here and I requested a contact from you. What's our process?
The process is it's a free initial consultation just to kind of get a feel. I ask those questions, for example, like, do you own a home? How much do you have in the bank? And just try to get a feel for how much money do you bring in per month? How much do you spend per month? Just to kind of get an idea of what I'm dealing with. Get a power of attorney and do a review to assess what a good strategy might be. That initial review, I charge $1,500 to do that, to pull all the transcripts and to analyze the situation. And then I come up with a plan, say, this is what I think we should do. If they say, yeah, and this is what it's going to cost. And if they say, no, I really don't want to move forward, that's fine. So they paid me $1,500 just to do the analysis, and that's the end of the story. Or we can go into some of these other things, maybe an offer in compromise if it's warranted, partial pay installment agreement. There's something called currently not collectible, which is similar to the partial pay installment agreement, except in this case, you're not paying anything. If somebody literally has no money left over at the end of the month, and you can convince the IRS that that's the case, then they'll go into a currently not collectible status until that 10-year statute of limitations runs out. Now, with either the currently not collectible or the partial pay, the IRS will come back and they'll say, well, okay, we agree with you right now, but we're going to reserve the right to every once in a while, usually every 2 years, we're going to take a look at the situation and see whether your circumstances have changed and now you can afford to pay more. The beauty of an offer in compromise, if you can get that done, that's a done deal. They're never coming back after you. Once you get that agreement.
So that's the golden ticket. The offer in compromise is the golden ticket.
It is. You have to pay something, but you could pay a heck of a lot less than what you owe. But they're just really hard to get.
It sounds like it, like they're fighting tooth and nail. How about, I guess the other side to it is like somebody like me, like I understand, like, hey, if I made a mistake and, for example, I owe $1,000 just for an arbitrary number, but then all of a sudden I'm looking at these fees, and I've tried to do this, and they laughed at me and they said no, and I tried to do it on my own, and they were like another like $600 or $800 in penalties and other BS. Like, what about just getting that waived?
All right, there's two ways to get penalties. Interest, you're not going to get removed, with a minor exception, which I'll talk about. But penalties, the first thing I would assess is something called a first-time penalty abatement. And that is really easy to get if you meet the criteria. And the criteria is, let's say that you owe, let's say you have a penalty of $2,000 from 2020. If I pull these transcripts and see that you didn't have any penalties at all, not $1 of penalties for 19, 18, and 17, 3 years, I just call the IRS up and say, I want a first-time penalty abatement. Takes me, 10 minutes maybe, and they just wipe it out. The other one is more difficult, but you're able to do it under certain circumstances. That one's called a reasonable cause. The person I talked to about before who paid the $20,000 up front and they didn't do anything to this big national firm,
Right.
I got a reasonable cause, saved her about $60,000 of penalties. And it was a situation where a family member had serious health problems and she was taking care of this person and had to spend a bunch of money helping this person. And I was able to get a bunch of those penalties removed. So when I said before, some interest, the interest you can get removed is only, believe it or not, they charge interest on penalties.
Yes,
So
I know it. Oh, I know it.
So if you get the penalties removed, then the interest associated with those penalties will also come off. But, people, reasonable cause, I mean, it has to be something pretty serious. Let's say serious medical issues. You lost your job. You didn't have any money. You had to take money out of a retirement account. You got penalized for taking the money out of the account. A natural disaster, something really serious for reasonable cause. And mostly it would be something medical related.
Brother, I hope that everyone takes the moment, goes to taxfighterinc.com, saves it in your browser. Listen, it's an unfortunate way I'm going to say this. It's not an if, it's a when situation. You need Ed. You got somebody to call. His number is 518-545-5680, 518-545-5680. If you're in that situation, you're running headfirst into it, give him a call. Listen, when you ignore that letter from the IRS, all you're doing is asking for problems and asking for trouble. So make sure you're reaching out to him. If you're finding us through Ed or Ed through us, make sure you're giving this a like, share, follow. I know it sounds cliche and all that, but trust me, that's how this whole thing works. Make sure you're joining us next week, and I'm going to butcher this man's last name. It's Brian Volkadamovich and Volkadinovich. Vukadinovich. Don't ask me how to pronounce it. I butcher all kinds of names. He's the author of 2 books, Motion for Justice, I Rest My Case, and Rogue in Black Robes. He's done numerous podcasts and radio interviews on judicial corruption and unfairness in the American courts. Again, another subject I like to talk to people about. One day they're going to figure out that I'm out here, Ed, and they're going to come after me. But for right now, they just look at me and go, "Hey, he's just some asshole in the Troy area. We don't even need to deal with him." So he's going to be coming on. We're going to be talking about the American justice system. Now, Ed, I know you binge watched all 300 and some episodes of this. People know how to get a hold of you and everything. But in every episode, the guest always gets the final word. So what is our final word for tonight, Ed?
All right. My final word is I want to talk a little bit about the big, beautiful bill. Because you hear all these politicians talking about no tax on overtime, no tax on Social Security, no tax on tips. Only one of those three things is true, and that's the no tax on tips. No tax on overtime is only, there's no, if you get time and a half working overtime, it's only the incremental half that is exempt from tax, not the entire overtime that you worked. So when they say that, I don't know if they even know they're not being honest about it, but it's not the entire overtime. The other thing is no tax on Social Security. Absolutely not true. Social Security is taxed the same way as it always has been taxed. But what they did is they give seniors over 65 an additional $6,000 deduction. So it's not right to say there's no tax on Social Security. You're just kind of getting a deduction of $6,000 someplace else. So little education on the big, beautiful bill.
You got to love that stuff. So, all right, folks, as always, be sure to push your stool in. This has been a Second Front podcast presentation found on Apple, Spotify, and wherever podcasts can be found.